Good afternoon, everyone. Ads here from Unity Trading Group. Welcome to a new week. Welcome to your Monday afternoon or Monday evening update. We're moving back to the afternoon time frame now, or the afternoon time slot, just because it works a little bit better with our schedules, and we've noticed a little bit more in terms of the YouTube analytics as well. So we'll keep it in the afternoon for the foreseeable future now. But if you're picking up what we're putting down, as Ty would say, give us a like. Obviously subscribe to the channel as well if you can, and hit the notification bell if you want to stay updated to all of our bits and pieces that we upload pretty much every single day during the week here at Unity Trading Group. And you can find us at www.unitytradinggroup.com for all the indicators and the guides and some bits and pieces on the website that we upload all the time as well. And of course you can find all of our links down below in the description. The Discord's one that we invite everyone to after, a lot of busy chats and a lot of busy charts in there as well. So good to see a lot of chat back and forth in the Discord. But moving on, BTC, what are we seeing? Where are we going? Well, with BTC, we spoke about a little bit of funny business over the last little bit. Oops, and I want to draw some trend lines in. I want to do it live. We spoke about some funny business and some silly business over the weekend that we usually see in this sort of market, and something that I'm noticing on BTC for the moment, and I've just drawn that in now on the chart just so you guys have a decent idea. And I hope hopefully for me, you guys can see the same thing as well. We're making a little bit of an ascending wedge here, which is a little bit bearish in my opinion, where we've topped at the 1.78 in the way of the BTC trend-based Fibonacci, and looking like we could probably come down a little bit from this level, which is the 24, basically 24,150, or the 24 even, pretty much, for a lot of this price action that's taken place over the last day or so and over the weekend. So I've identified a level of support, or even a level of demand just underneath is at 22,800 that really stands out to me. And that's a very low quality level, okay? So it could fall pretty easily, to be honest. If we do come back and retest that area, it could fall pretty easily because it is low quality. It wasn't really on a major pivot point. The one that really stands out to me a little bit further than that is the one down here at the 0.5 fibs. So if I draw that a little bit better, just really take in a bit more info. Excuse me one moment. Yeah, so if I draw in a little bit better, taking a bit more info, the 19K, the 19,400 area of demand is really the one that I'll be looking for, because if we do come down and break this liquidity area, if we do come and break through this, it's a very harsh drop in terms of after that, and there's not really much to the left-hand side that is really holding us up, and that's going to be really evident on the VPVR. So there we go. We've got a little bit of liquidity just underneath us, which corresponds nicely with the level of demand here, and you can see that by the extension of some of that volume on the VPVR on this time frame that we got in front of us. But there's absolutely nothing in between until we get back down to this level of demand, or the 0.5 fibs. So that's something that you need to keep an eye on if we are going to break down. If we do, I'm not saying we are, I'm saying if we do, there's not much holding this up till about 19.6. So something to keep an eye on. It looks like in terms of this formation, it is a bearish formation, and usually it does break to the downside. That's something that I'm pointing out, something that I'm just putting on your guys' radar at the given time, and I think it might play out, looking like that might be the case because of the rejections that we've seen at the 178 so far. However, if we do break up and we don't see this pattern play out, the 25K would be the area that I'm looking for, as I described in the Discord. I believe it was on Sunday. Moving on, ETH USD, Ethereum USD, don't know what the hell's going on there, but the Ethereum USD has been really hanging around this negative 27 fib extension over the weekend, and we haven't broken through it, really convincingly since then, and we have retested our level of supply or demand that we broke through previously. So this level's gone pretty much. Whoops. So this level is gone. I'll delete that. And all we've got now is the fibs to go off. So what we're going to do, we're going to get rid of that. We're going to get rid of this. And we're going to draw in our Fibonacci again to really give us a brand new set of eyes to look at the chart with. So right now we've been held on the 38.2. The 61.8 really stands out to me as a level of decent demand there, although it is quite small, so we might extend it a little bit higher. There we are at the 61.8 at 590. I think we spoke about the 590 as well on the weekend in the Discord, and of course on Thursday afternoon last week, or Thursday evening, our session. But it looks to me like we are breaking through this negative 23, or sorry, excuse me, this 23 fib extension now at the 640. If we do close underneath over the next couple of hours, then it could indicate that we are heading down on ETH towards that 620 area at 38.2. Which makes sense, to be honest, because we have been on a tear with Ethereum as well. You know, all the way from about 530 to all the way to 675. It does make sense to get a more significant pullback, and we could go all the way down to the 61.8, and that could still be healthy for Ethereum in the macro scale of things long term over the next, probably 10 days until the end of the year, and of course into January. So that might be good for Ethereum in the immediate term. Last one I'll have a look at is the DXY, and of course the DXY is a regulated market. These are just ideas and opinions of Team UTG, not financial advice. But in terms of the DXY, we've really observed what we needed to observe over the course of today, pretty much. When we opened this morning, we actually opened at 90.25, above where we thought we would retrace to. And we have moved up since. So we've been making a little bit of a ways to the upside. We've been, giving us that relief that it really needs. And if we are to continue to the upside, just briefly to really continue this short little run on the 4-hour macro scale of things, then the 90.65 is where I would be looking for. I'm looking at this cluster of candles, pretty much the green one in the center, and of course our retest to the right-hand side of that to really gauge the direction or where it could potentially end up. So 90.6 for the DXY, and of course you should keep the DXY on your radar. If you do trade USD pairs, even USDT pairs, you really need to keep the DXY on your radar, because that's what the USD is really measured against. It's really measured with this DXY, or the US dollar currency index. It is the reserve currency, and we need to gauge the strength if we're going to really see the likes of BTC, Ethereum, USD, and everything like that continue to the upside. If we do get some harsh and volatile movements to the DXY in terms of upside potential, then we could possibly see, those USD pairs retrace a little bit further, and that would make sense for BTC at the moment. However, not calling the shots yet, but looking like we will descend on the on BTC. And we might get a little bit more upside out of the DXY in the immediate term to about 90.67 or 90.70. But that really concludes our update for the Monday afternoon. Thank you all for joining me. And of course, if you like what we do here at UTG, give us a like, hit the subscribe button. It helps us out a whole lot. You can find us over at unitytradinggroup.com for all of our good stuff in terms of the guides, in terms of the podcast, and of course in terms of the indicators that we sell and do the subscription stuff for. But have a great afternoon, have a great evening, and I'll see you tomorrow night in our live session. Bye.